Imagine the bank paying you for taking out a mortgage. Imagine the bank paying you for taking out a loan. Or imagine you having to pay the bank for having a savings account. All these things are possible if the Bank of England decides to cut interest rates to negative. Now, this is going to affect every single one of us in some sort of way. Everyone who's got a bank account or a savings account, a mortgage, a debt, student loan, a business loan, whatever it is, it's going to affect us in some way, shape or form. And it's extremely important that we understand how it's going to affect us and we are aware of what's happening, because a lot of the times financial information, economics, all these sort of things are extremely confusing and very difficult for everyday people to understand. I've been in the banking industry for almost 10 years and there's a lot of things that I don't understand. So I try to make these videos as simple as possible and try to explain things in layman's terms so we can all understand and know what's going on. So with that said, do smash the like button, because it does take a very long time to make these videos, especially information that is quite confusing and quite complex. It does take a lot of time and it only takes 1 second to like, so it'd be very much appreciated. Also, if you're new to the channel, then welcome. This channel does focus on people who have a hectic lifestyle, who've got a 9-to-5 job, a career, a family, and they're finding it hard to juggle all of that. So this is all for you, because I try to break down information which helps you invest better, save better, and become more financially secure for you and your family's future. So also subscribe to the channel to not miss out on future videos just like this one. So I'll try to break this video down into 3 parts. The first part is, why would countries or governments want to cut interest rates? That's first thing. Second thing, how is it going to affect you and I, just like everyday people? I'll go through a worked example of how it can actually affect us. And thirdly, has anyone done this before? Because there are countries in Europe have done this and in Japan who have done this, and let's see how they've recovered or how it's affected them. Right, so the first thing we want to talk about is, why exactly do countries cut interest rates? Well, it's very, very simple actually. I don't really want to go into too much detail or try to make this too complex, because actually the answer is very simple. And the reason why it happens or countries do that is because of one thing, and that's to stimulate economic growth, stimulate economic activity. So whenever you think about a country cutting interest rates, automatically think, oh, struggling economy, they need to boost economic activity. And that's exactly why they do it. If you think about, we're in lockdown right now, coronavirus has hit the globe like hard, financially hard. Economies are struggling all across Europe, America, Asia, etc. So whenever something like this happens, the countries do cut interest rates to stimulate economic growth by forcing banks to lend more, forcing people to invest and spend more, etc., etc. We've seen it back in 2008, 2009, when the whole global recession happened due to the housing market. We saw countries cut interest rates to stimulate economic growth, and it worked. But going to negative interest rates is something new. It's a completely new territory. Over in the US, they have never done that before. Here in the UK, we have never done that before. There have been other parts of the world that have done it. Like, for example, in Europe, we've seen Denmark, Sweden, who have done that. And we've seen Japan also done that. So it has happened before, and we'll discuss this further down in the video. But for now, just know that it's a very unprecedented thing to do. Negative interest rates is not a common thing. Okay, now let's move on to the second part of the video, and that is, how does cutting interest rates, and more importantly, negative interest rates, how does it affect you and I? So at the beginning of the video, I probably baited you a little bit, and I apologize for that when I said, oh, imagine getting paid by the bank to take out a mortgage, or imagine getting paid by the bank to take out a loan, etc. That was not true. Because even though interest rates can go to negative, it doesn't actually mean the bank's going to charge you negative interest rate. And I've been reading a lot of articles, and I've been watching a lot of YouTube videos actually, and other content out there who don't really explain this concept very well. They kind of mention, oh, negative interest rates is cheaper to borrow, etc., but they don't really explain what it really means or how it actually affects you literally. So let's say, for example, you want to borrow £10,000 from the bank, and let's say we currently got a positive 1% Bank of England interest rate. You probably think that £10,000, if you pay 1% interest yearly, that's going to be £100 for the first year, right? Now that's not actually true, because you have to think about interest rates as just a component of the overall cost of a loan, okay? The overall cost of a loan is what we call the APR, and that is the true cost of a loan over a 1-year period. And the APR includes the the interest rate, so the bank of interest rate that we just talked about, let's say the 1%, but it also includes bank charges and fees. So the bank has its own admin fees, processing fees, and all sorts of fees that they got to put onto it to actually make some money. Because think about it, the bank has got staff, they've got buildings they've got to pay for, they've got salaries and bonuses, fat bonuses they've got to pay for, and they've got to find a way to make money. So one of the ways they make money is through the banking fees and charges, plus all the interest they charge you. So let's say for this example, the £10,000 example, the bank charges you 5%. Now we add the 1% Bank of England rate, interest rate, onto that 5%, and we've now got a total cost for that loan of 6%. That is what the APR is, the bank fees plus the interest rate. Now let's see if the Bank of England was to cut to negative interest rates, how it will look with that loan. So let's say the Bank of England rate cuts it to -1%. Right, let's take that same £10,000. Okay, we've got bank fees of 5% minus the 1% now. Okay, now we've got 4% of the total cost. The 4% is the APR, which is the total cost of that loan. So the cost of borrowing becomes cheaper, not free. Not the bank's going to pay you money, it becomes cheaper. So it's a great time if you want to get a mortgage and buy a house, great time to take out a loan, great time to remortgage, refinance. This is a perfect time to actually borrow money. And that's the whole purpose of this whole thing. The government, wants to encourage you to do this so it can encourage economic growth. But please do be careful. All because borrowing becomes cheaper, it doesn't make it any less difficult to pay that loan back. Of course, you're paying less interest, on that loan, but it's still a gigantic liability because taking on more debt is never a good thing. Now, that's the benefit of us, okay? That's benefiting us consumers, borrowing becomes cheaper. But what about the flip side? How does it negatively impact us? Because it does. For example, if we do cut to negative interest rates, that's going to affect people holding cash in savings. And it's not just us, individuals just like you and I, who's going to be affected. Corporations, companies, businesses, a lot of them hold serious amounts of cash in bank accounts so they can earn interest on that money. All of a sudden, if you've cut to negative interest rates, there's no longer an incentive to hold money. What can actually happen is the bank could end up charging you, at least if you've got 0.1%, which is very low. At least if you've got 0%, you're not paying the bank to hold money, okay? But if it goes to negative, the bank could potentially ask you to pay them to hold their money. So this could be a massive deal. Now, it's totally up to the bank themselves if they want to, charge you for holding a bank. They could themselves just take the hit, to keep customers. We could possibly see that happen. We've got loads of banks here in the UK who are going to be competing each other for customers. And you might see some banks, if it ever goes to negative interest rates, you might see some banks just not charging people for it, to retain customers or to gain new customers. Right, let's now move on to the next part of the video where we talk about if other countries have cut to negative interest rates before and how they've coped. So I mentioned earlier in the video that parts of Europe have done that, and in Japan they have done that. So I think Sweden were the first country to do that back in 2014 or 2015, I believe. And then Denmark followed suit and they did the same thing. And of course, Japan, that I mentioned, Japan also did it. Each of those countries actually had their own problems, own economic struggles that they were dealing with at the point in time. So negative interest rates was their way of trying to spur economic activity, improve economic growth. But since doing that, what we've actually seen is not that big of a growth or not that big of an impact on the economy. In fact, their GDPs, the GDPs of those countries actually didn't increase by that much. So that tells me a couple of things. One, that they were probably in such economic struggles, these countries, that even with these negative interest rates, it didn't really boost the economy that much. Their GDP only grew about 1%, I think 1.5% year on year on average, actually. In Japan's case, it was even less than that. They were growing around 0.5%, 0.8% in that time. So extremely slow growth in terms of their GDP. That doesn't necessarily mean going to negative interest rates hasn't helped the economies. Maybe it has. Maybe it was struggling so bad that all they could possibly get through negative interest rates was only about 0.5, 0.8% in Japan's case, or 1% in Denmark's case, etc. So it doesn't really give us enough data or a clear picture in terms of how well negative interest rates works. If you look at Japan, for example, they're unique in the sense that they're one of the biggest global economies. They're a global powerhouse in terms of their economy, but they've been having a struggle, but their growth has been struggling. They've got a very aging population, which is hurting them quite badly. They don't have a young workforce, so a lot of their industries are going to struggle in the future, if not already. Also, Japan is quite cut off from the rest of the world. They're not as innovative as, say, the US or China in terms of technology. A lot of the stuff they develop, they're not very mainstream anymore. So these specific problems that the countries have, even with the negative interest rates, hasn't really change the outlook of these countries. So it's very hard to tell if, for example, the UK were to go to negative interest rates, will it help our economy? Or the same if the US were to do it. We don't know. Who knows? Nobody does know. All we do know is that borrowing will become cheaper, so that's great. So let's look at a specific example. So in Denmark, there was a bank there that launched its first ever negative mortgage. I think it was charging like minus 0.5%, which is quite big if you think about it. But then you've got to obviously think about the banking fees and banking charges that get added onto that. So it's not free money. I mean, a lot of these articles, they just give the headline, right? Negative mortgages. Wow, you're going to be paying less than you borrow, etc. But if you have to think about the bank charges that get put on top of that, which have to be paid back, etc. So the bank has to make money. There's no such thing as free money. The bank has to make money. Otherwise, how will it survive? How is it going to make a profit? How is it going to pay its staff? But what the bank has also done is, if people want to deposit their money in terms of savings into their bank, into their account, then they have to pay for that. So they're trying to make up money, or trying to make up on the interest that way. So even though they're giving out negative mortgages, they're charging people to bank with them. So what does that say for the outlook of the UK? Well, it's very uncertain right now. We're already at 0.1%, which is close to 0% interest rates. If we do go to negative, who knows what's going to happen? All we can do is just watch out for what we're doing ourselves. It does mean borrowing is becoming cheaper. And also the data that we've seen from Japan and other parts of Europe when they've cut negative interest rates has not been that great in terms of their GDP growth. But again, those countries had specific problems which they were dealing with. So who knows how it will affect us? What we do know is that the coronavirus is a very specific, unfortunate pandemic that we've had that's hit the global economy. Everyone's having to find unique ways to solve these problems. The US are considering negative interest rates. In fact, they're very, very close to it. And what usually happens in the US tends to kind of follow down to the UK for some reason. Whether we like to admit it or not, we are very closely tied to the US markets and how the US economy works. So if they start to, think about negative interest rates, and if they start to do it, then we could potentially follow suit. Anyway, guys, hope you enjoyed the video. See you guys next time.